Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Sergio Pejoves. Sergio has been involved in many different facets of real estate investing in several markets throughout the U.S., from single-family rentals to 100-unit complexes. So thank you so much for being on the show, Sergio.
Thank you. Great to be here.
So what was your background prior to starting to invest in real estate?
I was in the mortgage industry. I came to the U.S. back in December of '99, and I was working. I'm originally from Peru, and born and raised. And I came to the U.S. at age 25. Before I came to the U.S., I was working for the family business, and I started when I moved here. I worked with my brother. My brother had operations, mortgage operations, and I was a junior loan officer and trying to learn the business, and that gave me kind of like light on what was all about real estate. So I worked with my brother for 3 years, close to 3 years in El Paso, Texas. So that was where my beginnings, in that exposed to real estate.
So why did you choose real estate as your investment vehicle when you started investing?
Well, after working with my brother, I became a mortgage broker, and as you all know, in 2007, 2008, the market turned. So I always thought, I remember I met this gentleman and came to my office and just walk in and say, "Hey, Sergio, I want to talk to you." And said, "Sure, have a seat." And he was, his early 30s. And I said, I want to refinance one of my properties. And I said, "Oh, how many properties you have?" And he's got around 35, 37 properties. So I was very, impressed by being so young and being able to acquire so many properties. So I was very curious about his journey. And I said, "Hey, why you want to refinance? Maybe I'll buy it from you." And that was my first rental property, single family. So that was an inspiration for me that whenever, as you know, everything is cyclical, right? Everything turns. So I kind of knew that at one point things would slow down on the mortgage and there would be an opportunity on the real estate side of it. So I always had in my mind that when things turn and slow down, or there's a shift in conditions, that I will go into real estate. Okay.
So your first couple investments were single family?
Yeah, single family rentals, and I started. When the market turned 2008, I moved from El Paso to Houston, and I decided to get full time into real estate. So I did fix and flip, in the suburbs of Houston. And I did quite a lot of properties. I did on Spring area, Katy area, a lot of the suburbs. Flip approximately 15 to 20 properties a year. So it was a small operation, but I was very busy. And at one point I thought why, instead of doing so many fix and flips, why not just go to the big leagues down in the city, and do 3-4 properties at a time, but larger projects. And that's when I opened Project Bungalows, in 2012. Mm-hmm. And I was doing fix and flips of bungalows, and I also started doing some new construction of craftsman homes in the Houston Heights area. It was a beautiful journey, really learn a lot about the business, and all the profits and all the gains that I was, getting from the fix and flips and the high-end remodels, additions, and new construction. I started buying real estate. I would start buying more rental properties. Nice. So, that was kind of like my game. I want to start capitalizing and then move all those gains into cash flow opportunities, and that was my goal. And in my daughter was born, and I guess everybody gets that kind of like, click, okay, what am I going to do if, what's going to happen if I'm not here? So that's when the whole cash flow really opened up in my head and said, I want to really go aggressive into the cash flow business through real estate.
Awesome. So what's your current investment criteria and strategy?
Mostly value add, We just closed our first large multifamily in December of 2020 here in Florida. And it's a full value add, meaning we're gonna find out what are the deficiencies on the expenditure, trying to improve the NOI, try to push rents, trying to do renovation on the asset, and that's what we believe is a more advantageous position to be.
Yeah. So with your background in sourcing deals, I imagine when you were sourcing deals in Houston and in Texas, you were sourcing deals off market so you could get deals. How do you source deals now? Are you sourcing them direct from owners still, or mainly using brokers, or does it depend on the size of property?
Yeah, I always deal with brokers, since, as my experience in Houston, I did some, postcard campaigns trying to deal directly with owners, it's a hit and miss situation, and you have to be consistent, and I was, and I had some, good leads, that eventually became opportunities, but most of my great successes, and great opportunities were through relationship with other brokers. I believe, you build those relationships with those brokers and you keep loyal to them, they'll be loyal to you. So they are kind of like your soldiers out in the market trying to, they know what's going on in particular neighborhoods, and let them invest their marketing dollars, let them go in the field, pick up properties, and, you build those relationships, you become that preferred buyer.
Yeah. So is that how you're picking up deals and finding deals in such a competitive marketplace?
Yeah. Continue building relationship with brokers, and that's my main activity. Constantly talking to them, how things are going, everything coming soon, and it is a team sport, as we all know about, right? I mean, multifamily is a team sport, and even though you may not have a deal today, you may have a deal in 6, 12 months, a year, 2 years. You have to think long term. So building those relationships are crucial. Keep communication, keep talking to your broker, build those relationships, and you don't need that many, brokers either. It's not like you have to meet every guy that is a broker in your market, but just pick the top 3, 4, top brokers and say, hey, please give me the opportunity. I want to be on the top of the list whenever you have a deal, and be proactive, when they send you the deal also, be responsive, engage with them, say, okay, send me what I need. I'll analyze, give me 72 hours. I'll send you a little LOI, or I'll say yeah or nay.
Yeah. It's amazing how many people do not respond to brokers when they finally get a deal from them.
Exactly. You have to respond to your broker. You have to engage with them. You have to, build that relationship. You have to build that trust. And, if you don't seem that you engage back, they want to go with whoever is going to engage with them at all times.
Right. Yeah, they want to have someone that can close the deal too, and it's going to be responsive to them when they send out the deals.
Correct.
When we met a couple years ago, you had just purchased a portfolio of single-family properties in Wisconsin, I believe it was. So
correct.
What type of team do you have in place to handle your acquisitions and management, since you're in several markets throughout the U.S.?
I think property management are key. That opportunity came in 2018, and it was brought by a broker. Again, relationships are important, and I was doing a transition there. I was, finish up my developments. I was making a decision to fall full time into real estate and cash flow and buying, portfolios and multifamily. So, it's not easy, on different markets. You really have to have that management team. You may not have it at the right place at the right time whenever you are acquired, and you have to kind of like dance that situation, and I think for what I learned about, that experience is don't be afraid to make drastic moves when are needed. Sometimes, they say, right, it's better the devil that you know, the devil that you don't know. But I think that when it comes to property management, it's important to make the right shift if you think that things are not going your way. And when I bought the portfolio, I kept the same team, and there were some, challenges along the way. But I didn't want to make a change, but eventually I did. And from challenges, things are start to look way better. And I'm exiting that market right now because I want to go full time into multifamily. So actually, that portfolio that I bought in 2018, we are trying to reposition, and actually we're making great progress. And there's a couple of buyers interested. So we're gonna sell that portfolio and move that capital into several multifamily projects. And that's my goal this year, to fully exit the single family market and go full time into multifamily and continue to grow our portfolio on the multifamily side.
Awesome. Yeah, that's great. That's great to hear on the on how you're doing that. What is your role on your team when you're raising? Are you raising money mainly? Are you doing acquisitions? I know you sponsor deals. What do you focus as yourself when you're on your team?
Well, I'm multifaceted. I enjoy everything. I enjoy, I have a director of operations that, is in my team. We get all the information, we get all the data. We underwrite a lot of deals, and, we're super particular. We don't have to close a deal every month. We're just trying to find that deal that fits our criteria, and it may happen once or twice a year, 3 times. We're not trying to compete to the guy next door or the other sponsor that is closing several deals. We're just very, very picky, very particular. And so once the deal is underwritten, I take a look, we discuss it back and forth, we send LOIs, and and then once the LOI is in place, there's of course a strategy to raise the capital and everything. But I enjoy all aspects. For the last 6 months, I'm being, talking to people that I know, on my Rolodex, and say, hey, they know me from, new construction, development, fix and flip. And now they realize I'm in the multifamily space. So I'm trying to pivot those relationships into converting them into passive investors. And I think it's a lot of conversation. This is not a let's get rich tomorrow kind of thing. So I'm being very, very happy with all the connections that I made, and a lot of people are providing me with soft commitments for future opportunities. So I'm just constantly trying to put together opportunities, and that's my role, oversee everything.
So as you transition out of single family, what do you see for the next 12 to 24 months in multifamily? And are you looking at any other real estate classes?
At this moment, I'm focused on multifamily. Here and there, I see other opportunities. And I was exploring, doing there's a lot of hotels, as you know, because of COVID. There's a lot of distress, hoteliers, so distress hotel owners. And I think there's an opportunity there to do a hotel conversion to apartments. And I explored a couple of opportunities, didn't pan out. So that's kind of when you ask me, if I'm looking at other things, it will be something to convert to multifamily at the end of the day. Mm-hmm. I see opportunity. I think we're gonna wait a little bit more how this stimulus plan that just came out, how it's gonna pan out in the market. And I think that there's gonna be challenges along the way, but opportunities at the same time.
What are you worried about most about going forward? Do you think it's interest rates going up when you're trying to refinance? Is it something else?
Well, I think that the Feds just announced, a few days ago that the rates are going to remain the same. So that gives us a little bit of a horizon for the next 2-3 years. That I don't think interest rates are gonna increase. I see that there's going to be, that's part of the stimulus, right? To incentivize the market. So I think that we this last portfolio that we bought, this last multifamily, we are thinking of refinancing in a year and a half, and we're concerned about that rates going up. But based on the latest news, I feel confident that the rates are going to remain attractive.
Okay. And with these different markets, I know you're buying all throughout Florida and some other states as well. What are you looking for when you're picking out a market? Is there anything specifically that you want to see or that you don't want to see?
I think at the end of the day, we all want growth, right? Mm-hmm. We want an increase in population, an increase on jobs. Yeah. Your typical, market highlights that are important. Just good trends. Not a perfect market, but just a stable, upward, market. Here in Florida, we're experiencing a tremendous migration, because COVID dynamics have changed where people can work remotely. And I think there's a lot of opportunity in Florida. And I guess I'm happy that I make that, the move here from Texas, in 2018. So I see a lot of opportunities now down south from where I am, like south of Palm Beach, just the cap rates are so low, and I think it's a different kind of buyer, more foreign investors or institutional investors that just want to park their money. But for small operators like ours, I think that probably things north of where I am in Florida are more attractive.
Yeah, no, I totally 100% agree with you, because living in South Florida for so many years, and people are like, oh, would you want to buy down there? I'm like, every time I see a deal, every time I review a deal, I would love to buy in Southeast Florida, but it's so expensive, and you're competing against people that don't need really a return. Exactly. So you're competing against people that are coming from up north, New York, Boston, and then tons of international money from South America, mainly, that is not really requiring a return, which is very difficult
to compete. Impossible.
When you need to pay returns to investors. So I think the same thing. It's the growth in population, growth in jobs, and then I want to see some kind of inverse trend with crime. I want to see crime somewhat decreasing over the last 20 years while you're having population, jobs increase. And I think the slower or the more steadily that line is, I think the more consistent that market's going to be. And because if a disruption happens, it's not going to be major. Whereas in these hot markets that you hear everybody talking about that's in value add, I think those are going to shake up a little bit more when jobs slow down or something happens, because they've been just experiencing so much growth.
Correct. There's a risk also on that end, right? As you said.
So you work, you've been a broker, a real estate, a single family wholesaler, flipper, single family portfolio owner, multifamily owner. What mistakes do you commonly see newer experienced real estate investors make?
I think that the mistake that they make is not taking action. I think that I see a lot of great, talented investors, that are in the space, but they don't submerge themselves fully. And I think that's probably your biggest risk, just kind of like paralysis of analysis, just stay where you are. And again, you don't have to close deals every month, but just be proactive, just be, I think that's probably the best mistake, just not making that leap of faith, not being engaging, not taking action on where the opportunity is at. And sometimes the opportunity is right there on our eyes, and we just, some people don't see it. So I think probably that, and also the notion that the deal, because it's hot, the money's gonna flow in. And we all make that mistake, the deal is strong, I'll get the money. And probably, I think that it's important to work your way around, have a conversation with people that you start with friends and family, right? Check all the relationship that you have in the past, all the people that they know you, and start having a conversation about what you're doing. Everybody wants invest and get money in return if they are full-time doing other activities, right? So at one point, everybody's passive, right? You buy stocks, you're passive. So have a conversation with people that you already know and tell them what you're doing. They may not invest with you in your first deal, but at least you already have built some sort of list of people that are going to believe on you, want to bet with you on your next opportunity. So I would probably recommend for people that are starting to be proactive on engaging and talking, bring the conversation, and say, don't be afraid. Of course, if you're doing 50cc, right? They need to be fully accredited. So make sure that you disclose that part, and that they are fully accredited. Or if you want to do the other syndication, I guess you're more flexible, right? You can also do joint ventures. Everything doesn't need to be a syndication. My last deal, it was in a syndication, and it was a $6.5 million deal. You can just bring people together and then say, hey, let's work and build something interesting here. So just that would be my advice.
Yeah, I think if you haven't raised money before, people ask me, I always tell them, raise 50% more than what you need. And the other thing too is that you found a deal. Say you're just, getting a soft commitment isn't just that you're in the bar with your buddy having a beer and he tells you, hey, I'll invest $50,000 into your next deal, and then 6 months later you get it. That's not really a soft commitment. Soft commitment is, what I'm saying about that is that they've reviewed the deal, they're interested in the deal, and they're going to give you some sort of feedback on it. And that's what you can consider as a soft commitment, not just, I spoke to so many people in the last few months and they're interested in investing. Well, everybody wants to invest in real estate, because I think every person, no matter where you are, knows someone that's become wealthy or made money in real estate. You know what I mean? It doesn't matter what, I think, level, income class you are, someone that's made money on a house, on a property, whatever it might be. And then the other thing we say about the analysis paralysis, I think that people are always looking for a home run, and they're comparing what the market was a year or two ago, which is important to be aware of that. But it's also, I stopped years ago trying to make a home run on every deal, knowing that, you have solid doubles. And, if you consistently are evaluating properties and consistently buying properties, you're going to have the doubles, the triples, the home runs, and eventually the grand slams, depending on where you are in the market cycle when you're buying.
Correct. I agree with you. Yeah.
So
definitely.
Now, getting a little bit more personal, what are some couple mistakes that you've made previously when investing in real estate?
I say what I mentioned to you before, when it comes to management companies, just making that decision. And it's a scary decision when you're trying to switch a management company. It's very scary. You hear all these horror stories. So, I guess if you want to do it, if you're thinking of doing, might as well do it. Mm-hmm. Don't be waiting for that perfect timing, or don't be waiting for things to change when they haven't changed. So I think on my personal experience, I wish I would be a little bit more decisive on changing, a management teams at the right time. And I just felt that, well, let's not rock the boat, let's just be more conservative, might as well, know the person, we already know them, let's just try to navigate the waters and not look for bitterness. So I would say I wouldn't say regrets, but, challenges were those, and I was able to make those decisions and change it. And they were not easy decisions, but I ended up making it. And I'm very happy right now that I'm working with better teams than previous ones. And now I feel better about it, and things are starting to look better. So don't wait until you feel, that, you have to do it tomorrow, just do it.
Yeah, it's amazing how overlooked property management is, even though we're talking about buying all these multi-million-dollar assets here, and their team is the only people that actually are going to be the ones talking to your tenants, most likely. Correct. I mean, you show up at a property and you're reviewing it, you have a tenant walk up to you and talk to you because they know that you're not the manager and you're not looking there to rent, so they believe that you're part of the ownership. Well, the thing is, mostly, I mean, on a daily basis, the person that's going to have contact with your tenants, with your clients that are paying everything, are going to be the people that are making $40,000-$45,000 a year hired by this property management company. Correct. And it's extremely important to make sure that you're on the same page. And then the other thing too about the management with you is that I remember my first management company I hired for properties I had, and it was like the first 6 months I was kind of rocky. And I realized a lot of issues that I had a couple tenants that we had put in before handing over. And I was like, I got to give them like a fair shake of going through it. And about 12, 18 months into it, the property turned dramatically around because we had a few problem tenants, that kind of shake of the boat. So it's thing too is having, it's if they just take over the keys, they didn't do any underwriting on those tenants coming in, right? That was most likely you or your other property management company. So blaming that on them isn't correct. You have to have them go the whole process and see what happens after a year or two when their tenants are in there and the tenants from the previous company or from you are not there. And so Sergio, how can our listeners learn more about you and your company?
Well, you can just visit my website, Worth Avenue Capital Group.com. They can, there's my bio is there, all the properties that we own, our portfolios is there, a little bit of history about us and, how we engage with our investors. So just that, visit our webpage, or look me up in Facebook, Sergio Pejoves. or Worth Avenue Capital Group.
Okay. Yeah, I'll put those links into the show notes. Thank you so much for coming on, and enjoy the rest of your day on beautiful Worth Avenue there on Palm Beach Island.
Sounds good. Look forward to having you here in the office one day soon.
Sounds good. Talk to you soon.
Thank you. Bye-bye.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars Incorporated exclusively.